Greetings, members one and all of the Salivation Nation. Some of you may remember recently, Silver Slacker had posted a couple of videos about the Silver Institute and Gold World Council's reports for 2017. We're going to kind of dive into them a little bit more here, but I encourage you definitely to check out Silver Slacker's videos on the topics that he's posted for both of those videos that he posted on these reports. So this chart looks somewhat familiar, but we're going to kind of delve into a little bit here, and we're going to start here with the World Silver Survey, supply and demand. And the methodology here I think is quite interesting from the World Silver Survey for 2018. And it talks here about how physical imbalances in any commodity market both explain and influence price action, physical premia and margins, and logistical areas such as lead times and scrap recycling patterns. Silver is no exception. Indeed, it also attracts varying attention from the investment and speculative fraternities, with, for example, ETP inventory build in 2017 standing at 2.4 million ounces, almost nothing, especially when compared with almost 50 million ounces in the previous year. In order to deal with risk and price management, silver is also a very active over-the-counter market. And a broad rule of thumb is that LBMA local London volumes are roughly twice the London Bullion Market Association published transfer numbers. In order to estimate the global OTC volumes, they assume that the local London accounts for approximately 70% of the total. And it was only until a few years ago that local London accounted for roughly 90% of the global total, but the growing influence of the Middle and Far East has reduced London's share, following a period of relatively stable trading volumes in the range of approximately 60 to 80 billion ounces. 2012 set the tone for a prolonged period of rising volumes, peaking last year with a whopping 163 billion ounces, just 2% short of the all-time high recorded in 1997, when the LBMA started releasing the trading and turnover stats. At that level, the notional value stood at $2.8 trillion, which is still considerably lower than the peak of $3.5 trillion recorded in 2011. And so this kind of talks about some of the factors involved in the methodology. We'll look here. It says Thomson Reuters supply and demand stats are collected and collated by a team of full-time research analysts based in Australia, China, the United Kingdom, United States, India, and Singapore, within an extensive field research program that includes interviewing participants throughout the industry. When undertaking the primary research, analysts garner information from jewelry and silverware fabrication, coin fabrication, sales, bar sales, industrial fabrication, refining volumes, shifts in above-ground bullion stocks, and scrap sales. On a global basis, Thomson Reuters also collects information and data on government sales and acquisitions and collates producer hedging and de-hedging levels. As part of the compiling and statistics, the GFMS team at Thomson Reuters maintains individual demand databases for over 85 countries around the world for almost 600 mines and producer projects. I read that so you kind of understand the background and where some of these stats come from. And so that being said, we're going to delve into the charts here. We see silver, a physical surplus versus deficit. These are numbers constant through 2017 in US dollars here. We can see here the real silver price and the amount of surplus and deficits, you know, and that we show here. And we can see that up until the year 2000, we had a pretty big surplus here. And then in 2000, a massive deficit. Now, keep in mind that though the deficit was pretty huge there for the year 2000 and 2001, look at the price. The price kept going lower. And then it started increasing a bit through 2005. And then we had the financial crisis. And then we saw a massive deficit, you know, there. But look, the price went back down. It just dropped crazy there. This is around 2007, 2008. And then we see here the price started jacking way up here. And in 2009, 2010, we had a surplus. and then it spiked up, and then obviously deficits hit back again for 2011, 2012, a small surplus, and really the only time that the surplus and price were kind of on even keel here. And then of course we've been running deficits ever since, but last year we had a very small deficit there for silver supply there. Now, this is an interesting one here. World coin and bar demand. And we can see here that for just coins and bars, you have it laid out by area here from China, India, North America, and Europe. And this is a telling, because this tells on the idea of silver and how it's being distributed here. North America, you can see, really has a pretty big chunk of these graphs here. Although in 2008, it had very, very small. In fact, that's where it had its smallest one. But India had a huge amount of demand for silver back in 2008. And that's interesting. Look at how many people are in India. A lot of people live in India. It's the second most densely populated country in the world. Look back at this chart. Look at that deficit. Huge. That's mostly India right here. Crazy. Now we go through here, United States picking up a little bit more, Europe, split between Europe and the United States, hardly any in India. In fact, India sold a lot there, looks like. They sold a lot. And then look what happened here. There's where that surplus comes in, as India had sold a lot here. 2010, 2011, almost nothing in India. 2011, they started getting some more because they realized the price was going up. That's that adage of people, at buy low, sell high. Well, it's buy high, sell low in some cases. And that's what happened here. They dumped it all, thinking that there wasn't much hope for silver. And then, again, here we have this real silver price, and we see what's happening with these markets here. China, very little activity with China through all these years here. But around the time when silver was very high, we did see some of the demand, coins and bars moving here. And a lot of other countries started to pick up, and other countries other than India, China, and the regions of North America and Europe here. Very interesting and telling charts here. And then we see here 2013. We've got some activity here that's been relatively constant through 2013 and 2014, with North America really picking up more of that demand. Quite fascinating. And Europe kind of pulling back a bit with silver. I think a lot of that, especially with those nations that charge a value-added tax, you're seeing that's why there's not as much demand. It really makes it cost prohibitive for many Brits and other Europeans who have to pay that VAT. 2015 is the high point when silver prices were pretty low, but a lot of people were, what, we need better get in on this. And this was the last year really before the big cryptocurrency bubble, the Bitcoin bubble that we saw occurring. And so that was the high point for almost all categories everywhere, including India. It only is second here to what it was in 2008 with India demand for coins and bars. China, not much activity going on in China there. North America, it's the largest acquisition, and Europe is a modest acquisition. Then I really do believe that a lot of the cryptocurrencies and a lot of people got out of silver, realizing that it's not going to go up, so they went into the cryptocurrencies here in North America. And especially in India too. India, not as nearly as much demand then. I think that accounted for most of the drop. But really 2017 was the year that it just really went back. It is on par with 2010. And of course, we see the price has been stabilizing over the last few years here with silver. And so demand has been relatively small there. So there it is, very fascinating. And then it goes on to some more in-depth stuff with supply and demand for the year 2017. But I think those charts basically say it all. But very fascinating study for sure. And we can see here, looking in for the world silver supply by type and by scrap, net hedging supply, net government sales, and real silver price here. We can see through the production of silver. But here, this is fascinating chart here that tells us about the world silver demand for 2000 up through 2017 by the applications. Coins and bars, industrial applications, jewelry and silverware. And it's no surprise that industrial applications will rule the day as they have for many years. And it's starting to pick back up again. We see 2017 is starting to increase a bit. I think we're going to see that increase even more. And jewelry and silverware is the second place accumulation of silver in the form that it's in. And it's in coins and bars where you see it really just go in different directions here. And as you can see in 2017, it's no surprise because of the crypto boom that we're seeing the demand for coins and bars kind of lackluster. It's not nearly as much as it was during the times when before in 2015 to 2013 when the price started dropping, people started buying more. And that's where those numbers have picked up. But fascinating indeed. Interesting information here for sure. And the report goes on. But I think those charts, really are telling as to where things are with silver over the past decade, really. Fascinating indeed. Post your thoughts. And again, thanks to Silver Slacker for making us aware of these reports. And I encourage you to check out his channel and his reports. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.